What's going on, guys, and welcome back to another video. In today's video we're going to look through the top 5 financial sector service providers or banks that I believe are the best ones to invest in the current economic situation. But before we get into that, could I please ask, if you're new around here, to smash that subscribe button, as it would really help this channel out going forward, and it would certainly encourage me to create more videos in the coming days, weeks, months, and even years. The first company that makes this list is Bank of America. The Bank of America Corporation is an American multinational investment bank and financial services holding company headquartered in North Carolina, with central hubs in New York City, London, Hong Kong, Dallas, and even Toronto. The Bank of America is traded on the New York Stock Exchange and has ticker BAC, and at time of recording, the share price was $24.25 per share. In terms of long-term dividend investors, the banking stocks are certainly a safe option, and in the Bank of America's case, we can see here that they pay 72 cents per share in dividends annually. This gets paid at a quarterly distribution, which equates to 2.86% of a dividend. One of the main reasons why I think buying bank sector companies is still a good option is that they still haven't recovered properly since the crash in March, and in Bank of America's situation, you can see that they were up as far as $35 or $36, $37 a share, and then in March they crashed down to under 20, and then since then they have started to go on an upward trajectory ever since, and are currently trading at $24.29. So I still believe that another few months, once the banking system and the economy starts to recover more, that the share price will only increase as more people start to take out loans again, so banks will be able to charge more interest, therefore increasing their bottom line. The second banking sector company that I would recommend is JP Morgan and Chase. We can see here that JP Morgan and Chase is an American multinational investment bank and financial services holding company headquartered in New York. JP Morgan Chase is ranked by the S&P Global as the largest bank in the United States and the 7th largest bank in the whole world by total net assets, with their total net assets summing up to a very impressive $2.687 trillion. So we can see here that JP Morgan Chase is traded on the New York Stock Exchange and has ticker JPM. At time of recording, their NAV was $94.90 per share. And in terms of dividend payouts, again, JP Morgan Chase is another impressive, safe dividend stock to hold in the long term. And we can see here that it pays $3.60 per share annually on a quarterly dividend payout, equating to 3.66% dividend. So we can see here, like the majority of banking sector companies, they took a massive hit in March. But before that, you could see their share price was up to nearly $140 per share, and it went down to even under $83 per share in the middle of March. But since then, just like the prior company Bank of America, it has started to slowly recover, and it is currently going at just over $98 per share. And again, as a long-term dividend investor, I think opportunities like this shouldn't be put amiss, and that over the long term, this company is going to go back to the $140 share price and even above, and continually pay out that impressive dividend payout. The third company on this list is Goldman Sachs. Now, Goldman Sachs is an American multinational investment bank and financial services company headquartered in New York City. It offers services in investment management, securities, asset management, prime brokerage, and securities underwriting. Goldman Sachs is traded on the New York Stock Exchange and has ticker GS, and at time of recording, their share price was $193.76 per share. Again, dividend payouts are another financial company's sector's stronghold, and is because they're definitely a safer buy than the majority of companies on the market. It's still an impressive 2.57%, and again, because it's such a safe kind of option in the banking sector overall, I find that that's still an impressive amount. So that's about $5 per share paid on a quarterly basis. So it works out roughly at about $1.25 quarterly per share, which is still quite impressive over the long term. And again, like the two companies prior to this, Goldman Sachs follows nearly a carbon copy example of the last two companies, where it was going quite high and quite impressive at about $245 to $250 per share pre-crash, and then it would drop drastically down to about $134. And ever since, just like the last two companies mentioned, the Bank of America and JP Morgan and Chase, it is currently going on an upward trajectory, and give it another 6 to 12 months and I believe it's going to be back to its all-time highs here of about $245 a share or even above. And again, because this is more of a long-term investment, you continue to get your dividend payout also, which is certainly a bonus. So to change it up a bit, the first three companies were more kind of long-term dividend paying financial sector companies, whereas the next two I'm going to look into are more growth sector companies. And with the ever increasing demand for online paperless payments, I believe the next company, Visa, is certainly an innovative company to look at when looking at this over the coming years. Now, Visa is an American multinational financial services corporation headquartered in California. It facilitates electronic fund transfers throughout the world, most commonly through Visa branded credit cards, debit cards, and prepaid cards. And especially going forward, I believe this is going to be the way forward in a cashless economy. So Visa has ticker V and is traded on the New York Stock Exchange. And at time of recording, its share price was about $196.65 per share. And because this is more of a growth company instead of a dividend company, we can expect to see a lower dividend, obviously. So Visa pays a quarterly dividend of overall to have $1.20 paid annually, which equates to about 0.59%. I also find it quite interesting to see that over the 1 year period, you can see that because it was a cashless form company, unlike a lot of the other banks, it recovered a lot faster since the crash in March, and in fact it's even back to its pre-crash share price at roughly now about $196.60 a share. So it's not far off the $200 mark, which it was before the crash, which is certainly impressive. And it kind of just goes to show as well that people are moving away and turning to more of a cashless economy to help stop the spread of a lot of different germs and viruses as well going forward. The fifth and final company on the list is another growth investment services company in the form of Mastercard. Now, Mastercard is an American multinational financial services company headquartered in New York. The company is traded on the New York Stock Exchange and has ticker MA. And again, just like Visa, because it's more of a growth stock than a dividend stock, its dividend is quite low. So it's at about $1.60 paid annually per share, which equates to about 0.48%. And yet again, just like Visa, Mastercard has increased its share price since the beginning of the crash, which I find very interesting. So before the crash, it was up to about $340 per share, and then it crashed down to about $211. And again, like Visa, it has went in an upward trajectory a lot quicker, and it has recovered a lot faster than the three first dividend-based companies in this sector. So you can see it even went up as far as about $366 per share. I know it has dropped down a small bit again, back to about $325. But again, that's still very impressive considering there was a global crash just a few months ago. So with that being said, guys, that brings the end to today's video. So we went through 5 financial services / banking sector companies in the form of kind of 3 dividend paying companies, which were Bank of America, JP Morgan and Chase, and Goldman Sachs. And then we kind of changed it up a bit for number 4 and 5, and we looked at more growth kind of potential companies in the form of Visa and Mastercard. So if you like today's video, please smash that like button. And again, if you're new around here, please consider subscribing to the channel, as it would really help me out in the long term. Comment below if you have any other banking sector / financial sector companies that you think should have been on this list. And also, please comment below if you think one of the 5 companies I've mentioned isn't worthy of the top 5 list as well. So thanks very much, guys, and I'll see you all in the next one.